Financial markets are all about education and experience. Talking to industry professionals can therefore enrich everyone's journey to become financially literate, which is one of the core goals of Investro. Hello and welcome to another episode of the Investro Podcast. Today's subject, on-chain data. And we have our specialist, the CEO and founder of Altfins, the crypto analysis platform, Richard Fetyko. Richard, thank you very much for coming on.
Thank you, and thanks for having me on the show.
Could you just, first of all, introduce yourself a little bit more and tell us about your background and how you got into the world of cryptocurrencies?
Sure. Well, most of my career I spent on Wall Street, basically working for the financial, in the financial sector, working for investment banks. I basically lived and worked in New York City for 14 years. Worked for various investment banks as a sell-side equity research analyst, which basically meant that I was analyzing and researching technology companies. I was focused on the technology sector. And this research and analyses were used by institutional investors. So these would be hedge fund managers, family fund managers, mutual fund managers, who would basically read my research and consult with me on which technology companies that were publicly traded companies they should put into their portfolio. So I did most of that. My career was basically spent doing that. And then basically in 2017-18, like some of us or most of us, I caught the crypto bug. During the first sort of big boom, I began speculating and trading on my own. And basically realized that this new asset class, the digital asset class, was going to be around and it was going to grow. I was initially approaching this very skeptically, frankly, but I did realize that blockchain as a technology has a huge future ahead of us. In one way or another, there's going to be use cases, and that I want to be part of it. And then from my own experience of speculating and trading cryptocurrencies, I realized that the data that I needed to base my trading and investment strategies on was not widely available and was very fragmented. And so I decided to basically, with a group of developers, create a platform that aggregates a lot of that data into one terminal that gives me all the data that I need and news and information and business insights that I need to make my decisions. And so that's the platform we basically decided to start building in 2018. That's now called Altfins.
That's great. I mean, so you're saying you did work traditionally in sort of a normal investing scenario and then went into crypto, sort of seen both worlds really. And with Altfins, did you see, was it like a gap in the market then? There wasn't anything else there? Was there any inspiration from anywhere, or was it just off the top of your head?
Yeah, it's a good question. So, working in the traditional finance market, I was used to having tools like Bloomberg and Moody's and Capital IQ. And that's the kind of tools that were missing and still to a large extent are missing in the crypto space. That's still being built by us and other companies. And so that was part of my inspiration. There are also some online analytics tools that exist in the traditional financial sort of space that analyze, primarily publicly traded equities. And so that was part of my inspiration as well, these sort of market scanners. And so it wasn't an entirely new concept, but it was an existing concept that I applied to the new digital asset class.
That's great, Richard. Yeah, no, that really makes sense to have it. And you're sort of doing it for yourself, first of all, and then sort of passing your knowledge on to other people by creating the platform.
Right.
What we want to talk today about is the on-chain data. First of all, for the benefits of everybody watching, could you tell us what exactly is on-chain data?
So on-chain data is basically records of transactions that happen on the blockchain. And that maybe I just made it even more complicated, but so every transaction that happens in the crypto space is recorded in a public ledger. And that's one of the key aspects of blockchain and these Web3 applications, is that is that the interactions between the users and the platforms, the applications, so these could be decentralized exchanges, decentralized lending and borrowing platforms, decentralized gaming platforms, these interactions that happen between the users or the user's wallet and that platform or another user on that platform, peer-to-peer, every transaction is recorded in a public ledger. And that's simply put, when I buy Ethereum into my wallet, I buy it from someone else's wallet, and that transaction, I buy $100 worth, is recorded on the public ledger, and that data then can be used to generate some real interesting insights into the usage of these platforms, into the value potentially of these cryptocurrencies or tokens. And so on-chain data is basically each transaction that's recorded in a database. Public ledger is basically a database. Now, as an analogy, I use Visa and MasterCard. Visa and MasterCard, they're basically two large networks in the banking system that allow consumers to use their credit cards, debit cards to purchase something from a merchant online or offline. Well, each time a transaction happens, each time you use your credit card, a transaction is created that says that we're going to take $10 from your account and add it to the account of that merchant, the coffee shop or whatever. So these transactions happen on Visa's network, and basically from one bank account, some is deducted, and another bank account, that sum is added to. And this is what happens in the blockchain space as well. Some amount is deducted from my wallet and is added to another wallet. The difference is that the data is available to everyone to see. It's the transparency there on the blockchain data is the huge difference versus the Visa and MasterCard networks, which are private, closed, and only they have access to it and sell access to it, because that data is extremely valuable. And businesses can get access to it, but they have to pay huge sums of money for that. Whereas in the blockchain space or in the crypto space and Web 3.0 space, that data is available to everyone to see and have access to. And it's an extremely important aspect of this space that I think can lead to huge, and has led to huge boom in innovation.
Yeah, I guess that's really unique then for cryptocurrencies. I mean, and especially being able to see everything that's happening.
Right.
With the transactions, are they immediate? Are you able to see everything? Is it sort of straight away that you'd be able to see a transaction that was made?
Yeah,
in real time.
It's real time as real time as it can get, and in terms of like the server processing and of course, latency in the networks.
Of course.
But yeah, it's real time, and it's that has huge implications for various use cases.
And how would you go about actually reading the information?
Right.
And what would you be able to get from it?
So for an investor or a user, reading that information, obviously, it's there's basically been tools created for you. So otherwise, you would have to, if you really wanted to be at the primary source of that data, you would have to run a server, a node that basically processes these transactions. But for a regular person, that's not feasible, and it's really unnecessary. But there's tools that basically read that data for you, summarize the data, maybe even then another set of tools that create business intelligence on top of that data, so that it's not just millions and billions of transactions, but it's really what are these transactions telling me? What's the summary? What's the insight that I can get from it? So there's tools that have been built, like Dune Analytics, the Graph, and a number of other sort of on-chain data analytics tools that have been built on top of that.
So in terms of, would you be able to extract the information you need to do trading just from on-chain data? Would you also use it in combination with technical or fundamental analysis as well?
Well, it sort of depends on the style and the investment approach or trading approach of the individual. so the on-chain data, it can be used for trading, but then I would say that's really for like, really cutting edge sort of trading applications or systems. For a regular person, investor, everyday Joe, the data I think is better used for investing, meaning longer term investing into cryptocurrencies or tokens of certain Web 3.0 projects. Whereas sort of day-to-day trading or short-term trading, I think the signals from the on-chain data is not as strong. Mm-hmm. So I'd say I personally use, and on our platform we advise using on-chain data more as a way of finding certain trends, and whether that project, that decentralized finance application is viable, whether it's growing in terms of their usage, in terms of their user base, whether it's growing in terms of the money that it manages, if it's a lending and a borrowing application. So it's more the on-chain data I think is more indicative of the fundamentals of that project, mm-hmm. as opposed to where's the price going. So it's has less predictive power of the price of the cryptocurrency, mm-hmm. as opposed to the underlying fundamentals of that project.
So more suited maybe to long-term investing rather than day-to-day trading.
My opinion,
yes. In your opinion,
yes.
Okay.
And that's how I personally use it. I identify projects that have some positive indications or trends, the growing user base, growing usage, and so forth, that tells me, well, this is a real project. It has a value proposition. Users find it valuable, therefore they're using it, and that's growing. And then I trade the price of that project's token using technical analysis or technical indicators, right? So for me, it's using on-chain data as an indication of some fundamentally sound project, mm-hmm. and then trading, I use a different set of indicators.
So you would use a combination of those ones.
Right.
So you would also use technical analysis, right. as well. Yeah, okay, that's really good.
To sort of gauge my entry and exit levels of that token's price. But I know that fundamentally this is not a scam. This is not, some hot air, and it's a real product. And therefore, I know it shouldn't be a zero, right? There's no, for me, that means that there's no risk of being just completely wrong and this going to zero, because there is some real use and value in that project, because I can see it in the on-chain data.
That was one thing I was going to ask, is because is the on-chain data completely reliable? Mm-hmm. Is there any way it could be manipulated or faked?
Yeah, good question, and can be to some extent. In fact, there is, I recall, a very infamous case of a group of developers who actually developed a real case DeFi project on the Solana protocol, but they wanted to boost its ranking. And so what they did is basically created other smaller projects. They almost created like a fake ecosystem to boost that project's TVL, total value locked. So that means how much money is locked in that project's smart contract, which would TVL is commonly used analytic to gauge that, especially in decentralized finance, to gauge the DeFi application's usage or sort of value to the end users. And so they were boosting the TVL, inflating the TVL 3 or 4 fold by creating these sort of almost like fake DeFi applications, and so they basically created the impression that this application is growing dramatically, and in fact at one point it was over 50% of Solana protocol's TVL, which was insane, and of course in the end then we learned that it was kind of faked. So sometimes it can be double or triple counted or is sort of fake to some extent, but I think these analytics platforms are getting better at spotting those types of
there's more safeguards, is there, in place?
I think so. I mean, this kind of reminds me of earlier in 2018 perhaps, very commonly exchanges, the centralized exchanges like Binance and Kraken and others, they were all, especially the newcomers, exchanges were trying to boost their ranking on coinmarketcap.com, which is the most popular token and cryptocurrency rating or ranking portal, and so the exchanges were trying to rise to the top of that list by faking and wash trading on their platform to make it look like there's so much activity, there's so much trading volume on the exchange. It must be real. It must be legitimate. It must be attracting a lot of traders. Whereas really, it was just wash trading between a couple of institutional accounts and whatnot. And so that reminds me, that kind of feels similar to some of these DeFi projects that were trying to boost their TVL ranking, because it does then attract the attention of the media and the users as well. So. It can be faked at sometimes, but I think there are some improved ways of or these platforms that are tracking these analytics have found a way to weed that out and filter that out.
Yeah, I guess security's at the forefront, really, isn't it? And everyone wants to be protected with all of their information and make sure they're reading the data correctly before investing any money. Could I also ask, is it simple for anyone to be able to understand on-chain data? What kind of skills or education would you need before you could, say, take advantage of it yourself with your own investing?
Right. And just the prior question, I just add that, even in the traditional finance world, there's fraud, right? There's accounting fraud.
Absolutely.
We find that out even with the, largest of the publicly traded companies sometimes. And so in terms of the skill set that you need, some tool sets are very rudimentary or base level, where you kind of need to do a little bit of SQL programming. You need to know how to, run queries or create your own queries. Some platforms have created already very user-friendly ways of querying the data, but it's still a little more for the technically skilled and minded people. But then there's platforms that have already aggregated the data for you and basically have extracted the business insight for you. Okay, like Token Terminal and Nansen, Coin Metrics are platforms that have already, sort of got rid of all the complexity of managing large amounts of data and figuring out how to query, and actually have already provided the insights. Here are the projects that are growing the fastest, their TVL and whatnot. I mean, we have some of that data on our platform as well. We have TVL and revenues for some of these projects. So you can already measure their revenues if they are generating revenues. So we've made huge progress in terms of being able to track the key KPIs.
Yeah, that's great news. So, I mean, people would be able to sort of look at it at a glance and get kind of an overview of how things are going on the market. Is that right? Yeah.
I mean, that's the point we want to get to. It's similar to what we have in the traditional financial market. When you look at a company like Google, you look at its financial statements. How are their revenues growing? Do they have profits? How are their profits growing and their margins and so forth? To some extent, we're getting there. For a lot of the decentralized finance applications, again, lending, borrowing, decentralized exchanges, and so on, they charge fees for their services, and so you can ascertain what are their fee revenues over time. You can look at the monthly or quarterly breakdown of their revenues as well. And so, we have that data now available, and which is extremely helpful. Again, that's a subset of the projects, DeFi. Some projects don't have any sort of revenues. They're based on some other concept of how they, what they provide. But for DeFi projects, we already have pretty decent analytics to go off of to judge the fundamental value.
Yeah, that's really, really helpful, isn't it? I mean, the fact that you can go on there, look at it at a glance and try and figure out what to do quite quickly. Obviously, people have got lots of busy lives and maybe haven't got time always for a deep analysis like a long-term investor would want to do. Right. Is there a part, though, where you could sort of direct them? Say you're a trader or an investor and you're just looking at the platform for the first time. What do you think is the most important tool or indicator to look at first? What information do you go to? Just the revenue of the company, or is there other indicators you use?
Well, it kind of really, again, depends on what type of projects you're looking at, what category it's in. Let's just say it's a Web3 gaming application that's based on the blockchain technology. The kind of data, on-chain data that may be relevant and pertinent to this project is, what is the user growth? What is the daily active users growing at? And you can get that from on-chain data. You can see how many wallets are interacting with that gaming platform's smart contract. And that information is recorded every time a transaction or some kind of interaction happens. It's recorded in the public ledger in the blockchain. And you can read that out. Well, maybe not you, but using certain tools, you can see and measure, is that game gaining in terms of the user base. If there's within that game, perhaps oftentimes there are certain items or powers that you can buy, right, or sell, or maybe you earn certain special powers within that game that you can sell then. That's also something that you can track. How much of these gaming items have been created and sold and bought. So there is, depending on the application, there's various sort of on-chain data that can be helpful. For example, other sort of not DeFi or gaming, just cryptocurrencies, let's call them, like Bitcoin, for example. The type of indicators that I think I like to look at are helpful are in and outflows from exchanges. So that what that means is that a lot of the particularly larger traders and investors in cryptocurrencies, they store their cryptocurrencies on cold wallets for security reasons. But when they get to trade them, they have to bring them out of the cold wallet, deposit it on an exchange like Binance, for example, and sell it. Well, we can see that in the blockchain. We can see that transaction. We can see that there's more inflows into the exchanges than outflows, right? Which would indicate there's more interest in or likely selling of Bitcoin than buying, right? Because when people buy Bitcoin, then they send it from the exchanges into their private wallets and store it. Well, when we see more people sending Bitcoin to the exchanges, that's a warning flag. That if they're sending it to the exchange, more than likely they're looking to sell it. So there's going to be some selling pressure from all this inflow of Bitcoin from private wallets into exchanges. So that's another sort of in and outflow of tokens from exchanges can be a flag, a positive or a bullish or a bearish flag of some selling or buying pressure that's perhaps going to happen. You can also, it's fascinating. You can track data like what's the holder's concentration of that particular project's token. Is it owned by a handful of very large whales, wallets that own 90% of the tokens? That's a warning, because there's very high risk that one of these wallet owners will decide to just dump the tokens. So what you want to see is a wide distribution of the tokens in as many hands as possible. That way, one particular actor doesn't have a big sway on the price of the token. So there's another on-chain metric that you can measure is, what's the concentration of the ownership of the tokens? Or what are the whales doing? Are they buying the tokens? Are they adding and accumulating more tokens? Or are they actually selling gradually on the open market? Again, an interesting on-chain data analytic that you can glean from on-chain data. So it's fascinating because this is the kind of insights and real-time insights that you don't have in the traditional financial markets. I worked in equities in the stock market, sort of environment for years, and there was tremendous delay in this kind of data. I mean, we're talking especially for not the insiders like the citadels of the world who have a lot more insight, but the regular investor, the individual investor, didn't have that kind of insight. Who is buying, who's selling, is there an accumulation or distribution happening, and also what's the length of the ownership. So if you see that a wallet is owns Bitcoin, well, how long have they owned it for? Are they sort of a hodler who's been sitting on the Bitcoin for now a year or years, or is it someone who owns it but they've been transacting it? So this kind of insight is fascinating, that you have access to it, and it's really democratized, meaning anyone can have access to it. Is fascinating.
So you can really see the biggest wallets on the platform with the analysis. You can see who's got the biggest wallets and how much they stand. And obviously, I think you've got whale watchers, haven't you? Lots of people just keeping an eye out to see, because it's generally a view that they would have more of an idea of what was going to happen on the market anyway. And obviously, they're making a huge difference.
Could be some of these, large owners of a particular token, could be insiders, could be someone, or could be one of the initial investors. So you want to be notified when they start selling. That could be a warning. Maybe there are lockups. A lot of times there are lockups for initial investors. Maybe their lockup period is over, and now their tokens have been vested, and now they can start selling. There could be some selling pressure, especially if they're a very large holder of that token. But then again, that's something that you can track, and in real time. As soon as they make the first sell, you can get a warning. That's possible with the on-chain data as well.
So with the on-chain data, if you were to use a platform and you were looking at it on Altfins, for instance, would you be able to set up your own personal sort of settings, and so you could look at the trends that you were interested in?
Well, our on-chain data right now are focused on the revenue and TVL, mostly for analysis of DeFi platforms. We don't have sort of a wallet tracking at this point, something that we may add over time, but there are other platforms that you can do that with. Sort of say, I want to monitor all these large wallets and be notified when a transaction happens, or maybe you want to invest into projects that large wallet invests in. You want to see what else. Okay, they own this project's tokens. What else do they own? You can see that. It's you don't know who owns that wallet. You don't know the person or the institution. You just see the wallet address. So it's not still anonymous, but if they own a token that you own as well, then you might be interested in what else do they own, and maybe those are projects that you might take an interest as well. So it's you can basically copy trade someone else's wallet if you think that they're doing well or interested investing into interesting projects. You can follow that wallet.
Yeah, this is really significant. I mean, there's so much data out there that you can just potentially look at to make your decisions now, isn't there? So, I
mean, in the traditional markets, there are filings that the large investors have to file. It's called 8 or 10F, I think, filing, but they file it in like every quarter, so you don't get to that data. Like, what did that hedge fund buy last quarter? Well, it's data that's months old. Here, immediately what they're buying or selling and what they're adding to their positions, or their portfolio. So it's a huge change, and frankly, the playing field has been leveled to a large extent, I think, with cryptocurrencies or the blockchain data, because you have access to the data just like any other player has, if you take your time and learn how to use the tools.
Has there been any significant on-chain data signals or reversals or events in the last couple of months?
I'd say, we're seeing that in the price of Bitcoin, that there's accumulation. I think we've hit the bottom, and that we've seen some whale sort of buying of Bitcoin, and more buying than selling. The sort of the largest owners are adding and accumulating more, and Ethereum as well. I'm actually more bullish on Ethereum, perhaps even, but so that's kind of just a high level. There's so many trends happening, it's hard to keep up. But also the DeFi category of projects have seen increasing amount of money that's deposited on these platforms and locked into their smart contracts. So we're seeing, because that had been declining in 2022 most of the year. 2022 was obviously a crypto year, crypto bear market.
Yeah.
And it was brutal, but we're seeing signs of a turnaround certainly, and we're seeing that in the on-chain data, but we're seeing that in the prices as well. So there's certainly some correlation.
And I'd just like to ask as well, I mean, is there anything, imagine if you're a new trader and you're an investor and you're trying to learn a habit and a routine to be able to read this data. What would you say and advise them to initially look at if they were to go onto on-chain data? Is there like one or two things that you'd say, definitely just check this, this is the most important area to look at? Say if it's for like Bitcoin, for instance.
There, some of the things that I mentioned, is in and out flows on exchanges. I think is important.
Yep.
I think looking at another analytic that's very helpful is how many owners of Bitcoin are in the money or out of money. Again, from the blockchain data, you can read, you can summarize that 30% of the wallets bought it at an average price that's that's lower than the current price. So currently Bitcoin is at $28,000 or so. Well, from the on-chain data, you can ascertain 30% of current owners of Bitcoin have an average price that's below $28,000. So they're in the money, they're making money, and 70% are losing money, right? And that can be also an indication of, okay, well, if they're losing money, they may be inclined to, just to sell at a loss, and so you kind of want the new buyers to step in, and you kind of want that in money or out of money ratio to be higher in favor of in money, meaning traders who have bought it recently, and therefore sort of the. That's another interesting analytic that people look at in terms of Bitcoin specifically. How many new wallets are buying Bitcoin? So how many new sort of users are accumulating Bitcoin? So I don't think there's one. There's, I think, multiple. But again, it's not something that I think that you can necessarily say, well, tomorrow, that means that tomorrow the price of Bitcoin is going to be higher. But I think it paints a picture of a certain trend that you can say, okay, well, this is now a trend of accumulation, and I want to be part of that trend because I think that longer term this has legs, or this and that project, DeFi projects, has a growing revenue or a growing total value locked on the platform. So that's an indication of fundamental value. Doesn't mean that the price can't go down of that token, but it means that longer term it should probably correlate with the fundamentals.
In terms of education, where would be a good place for people to start maybe and get some initial insight? I'm really recapping what you've gone over.
Yeah. Well, specifically for on-chain analytics, we have some education courses and videos that have on our platform, but also every one of those platforms that I mentioned. Dune Analytics, The Graph, Sentiment is a good one as well. Sentiment has a lot of valuable on-chain analytics, have their own sort of academies, if you will. There's a company called Moralis. Moralis has built tools for developers. So if you're building an application that uses on-chain data, they extract that complicated data analytics and management layer of it and give you the tools to basically just get the insights, to quickly query the data or get the signals, if you will. And so Moralis has also well formulated academy with courses on learning how to use the data, how to get to the data, how to program certain aspects of data queries and things like that. So those are, I think, good square. MetaMask, which is the leading digital wallet provider, increasingly not just for individuals but also institutions. They also have an excellent academy or I'm not sure if they call it academy, MetaMask, university, learning platform as well. I think it's a good place to start as well.
And what about off-chain data? What about the information you're not getting on on-chain data? Are you combining both of them, like we talked about earlier? And is there fundamental analysis that you would use as well and look at?
Well, I mean, we certainly have some data. We have, research, we have news, we have Twitter news, we have news from 40 different media portals. We have, prices. A lot of times the prices don't come from on-chain data, but from the off-chain exchanges like Binance and Kraken and Poloniex and so forth. And we calculate various sort of price-based analytics, so moving averages and technical analysis type of indicators that we calculate that's not on-chain, right? But we can bring it on-chain once we sort of calculate, because on-chain data, it's not great at storing large amounts of information and large file sizes, like images and videos. So you kind of have to store that off-chain, and then so that's what we do with a lot of the analytics that we calculate, like the technical analysis indicators. But we can bring it on-chain basically later. But we do in our platform, we have both on-chain and off-chain data as well.
And is there anything else that you'd like to mention about on-chain data that you think would be really useful for people to hear?
Well, I think the one aspect that we didn't touch on is the fact that how it opens innovation. Getting back to my Visa and MasterCard examples, there's a lot of fintech companies, startups that want to use that data to offer some innovative services, because knowing what are the trends in certain consumer category, let's just say home appliances. Well, Visa and MasterCard purchase transactions can tell you, well, this home appliance brand is doing really well, it's gaining market share, for whatever reason, or this particular product or this category. So that valuable insight can be used to offer comparable products and services or some intelligence. And there's a lot of fintech companies that would love to have access to that data, and the data is extremely expensive, so it's sometimes prohibitively expensive. Well, in the blockchain space, that data is available. Okay, you may have to pay for a tool that helps you get the insights and extract it, but it's not, you don't have to pay for the data itself. That's available. And so that opens up the innovation, dramatically. The costs of getting involved and building on top of the blockchain data are much lower. The barriers to entry are much lower, and therefore the innovation is exploding. And we're seeing that. We're seeing that in the gaming space, social space. There's a lot of new Web 3.0 applications that are building, and big part of that, sort of the catalyst for that is the fact that the data, of the interactions and transactions that happen, is available to anyone and any new startup. And so that transparency of the data is a key aspect of innovation, I think, and that's why I think Web3 will it will outgrow any sort of closed systems that we have in the Web 2.0 world today. Facebook, Twitter, and other sort of Web 2.0 applications that are not sharing their data, will be I think sort of out developed by the open systems of a blockchain system. So that's it in terms of the use case. Another use case of the public ledger or the blockchain data, and it applies to investing as well. I think it gives way more power and way more strength into the individual investor's hands to be able to base your decisions on real-time data that you would not have. I mean, people don't have access to Bloomberg data. People don't typically have access to business information of how is Google doing this quarter. We don't know until the quarter ends and they report their results a month and a half later. So really you're looking at way delayed data, whereas on the blockchain space, you can see how that project's doing every day if you wanted to track, their progress, how many new users they've attracted, what kind of revenues they've extracted and so forth. So it's, I think it's fascinating, but, maybe I'm biased because I'm neck deep in the rabbit hole of crypto and blockchain.
Well, I think you understand it. That's the only thing, and it's kind of the education about other people understanding that all of this data is available for them to look at and to use. To be honest, it's been a really great insight going over everything like this.
And I think it's still a challenge for us, the fintech companies in this space, to make that data as easily available and ingestible as possible. The user interface, the way that that data is presented needs to be constantly made easier.
And we're having lots more upgrades coming in the future in terms of where do you see it being in say 5 years' time?
Well, I think one thing that we'll see more of is a lot more automation and AI. I know it's overused, but with all this data availability, it makes sense that artificial intelligence platforms will make excellent use of it, as opposed to us, mere humans can't process the information as quickly and as efficiently. So I think we'll see a lot more AI being applied to this data to make either investment decisions or even decisions around, what's the business intelligence that we can glean from it. Various ways of using that data to make us more productive or better investors.
This has been incredibly insightful, Richard. It really has been useful. I'm sure many people listening will be happy with all of the information you've given, and they'll certainly be able to do their own analysis now. For everybody at home, please remember to go to investro.com, where you can sign up for our newsletter and receive the latest financial information every week. Also remember, you can subscribe to the podcast on YouTube, Spotify, Google Podcasts and Apple Podcasts as well.